America turned 250 years old this past weekend. In the last 2.5 centuries, we went from a farming economy to launching rockets, robotics, and artificial intelligence. Today, I'll discuss briefly how we got here, where business is heading next, and two stories moving the markets right now. A stock that every passive investor suddenly owns, and a new way for kids to start investing before they can read. My name is Colin Bernd, financial advisor at Advent Partners, here to provide this week's market commentary. According to the Morning Brew, back in 1976, 95% of workers farmed the land, and the economy could tank from one bad harvest. From there, it has been a story of continuous innovation. Factories and unions in the 1800s, Thomas Edison's electricity in 1882, the Wright brothers inventing the plane in 1903, the polio vaccine in 1955, computers entering the workplace in the 60s, the internet in the 90s, the iPhone in 2007, and ChatGPT in 2022. Companies like Coca-Cola, Ford, GM, and Apple innovated and defined how business works. Today, most of the focus has shifted to AI leaders like OpenAI and Anthropic, and the energy players racing to power it all. That brings us to this week. SpaceX just joined the NASDAQ 100, less than 1 month after going public. That matters even if you do not directly own the stock, as many funds tracking the NASDAQ 100 index, like Invesco's QQQ, are required to buy it, with no choice involved. While it usually takes months for a newly IPO'd company to join the index, the NASDAQ created an accelerated process for mega cap IPOs, and Anthropic and OpenAI are expected to follow after their own IPOs later this year. Conversely, the S&P 500, another major index, turned down a similar request to fast-track the process, so it will not be included initially in their index. Here's one of the major concerns. JP Morgan says that funds will need to buy up to $4.3 billion worth of SpaceX stock, but less than 5% of the shares are currently available to trade. This creates huge demand chasing a few shares, which can spike the price but also lead to more volatility. Another major headline this past week is that the Trump accounts are officially live. Any American child with a Social Security number can get one before turning 18. Parents, employers, and even charities can contribute up to $5,000 a year pre-tax into a long-term index fund. Upon reaching age 18, the child takes control and the account is treated and taxed like an IRA. More information can be found at trumpaccounts.gov or the IRS website. Some children get free money to start. Any child born between 2025 and 2028 gets $1,000 from the government. Lower income families with children born between 2016 and 2024 could get up to $250 from various donors such as Michael and Susan Dell. The rationale behind these accounts is this: that $1,000 invested today in passive index funds, left alone for decades to compound, could grow to a substantial balance by retirement age, giving the next generation a head start in saving for retirement. It will be interesting to see how these accounts perform over the coming decades and if it's actually working as intended. In conclusion, 250 years of America's history is proof that today's biggest companies won't always be tomorrow's, and that this last week's round of headlines are a reminder that the market keeps finding new ways to pull us in. Thanks for listening, and hope you have a great rest of your week.